Good morning, everybody. So the Florida real estate market is some serious trouble, okay? There's some really big numbers out there. I did a video on it yesterday, and I told you guys that when I saw the alarm bells going off, I was going to be screaming to high heaven, because that's what Jack does. His mouth gets him in trouble all the time, and no other real estate agent is going to tell you this stuff because they're trying to sell stuff. I'm trying to give all you out there the information that you need to know to navigate what's coming up, okay? And so in this video, I'm going to talk about the data I'm seeing behind the real estate market in Florida, the boots on ground, what I'm really seeing, and things that are really affecting deals. And if you're buying a new house or you're looking to sell a house, you need to know these things. So I'm going to walk you through it step by step and tell you the nuts and bolts of what is really going on and where I see things going. I want your opinions on what I'm about to say, and I want to have a discussion. And I'm going to throw in at the end what I think you should do or a person should do, because hashtag not giving advice, hashtag just trying to give y'all information to think about and put my opinions out there. These are just my opinions. So let's get down to it. All right, so my name's Jack. I do videos on anything I feel like actually doing that morning. I've done travel vlogs and real estate and fishing and who knows what I'll do next. And in this one, I'm talking about my real estate experience, because as a real estate agent here on the Gulf Coast of Florida, Alabama, I am seeing it firsthand, because I'm a guy out there actually doing deals, talking to everybody every day, going to the sales meetings, going to open houses, going to showings, and mixing with everybody out there that is an elite level real estate agent here on the Gulf Coast. So I want to go ahead and talk about, yesterday I did a video on it was actually backed by Fortune Magazine's last article on what Goldman Sachs, Fitch, Moody's, and all the other really smart guys up there at the trading desk are saying about the real estate market and what they're expecting it to do. I mean, Goldman Sachs is preparing for 10 to 15% reduction nationwide in housing prices. Fitch, Moody's, same thing. If we get a recession, they're saying 15 to 20. It's really more like 25. And they're saying that there's a possibility that some of these markets will go down at least 30, some going up to 40. It is nuts. So what I'm going to do, I want to paint the picture so everybody understands my thoughts, and then we'll get into opinion-based stuff. So the data says this. If you have an 800 credit score, you're going to be looking at a 7.8 interest rate. If you have a 6.95 credit score, you're going to be looking at 8.25% interest rate, okay, on a 30-year fix. That's wild, okay? Back in the day, I was given 8% hard money mortgages, okay? And I thought I was like really getting a return. This is wild. But we can expect 2 more rate rises. I'm just going to go ahead and throw that out there. We had a failed CPI number. It was way too hot this month, so we're getting a 0.75. We know that's happening. So go on and ratchet that one up. We know that the Fed's going to meet another time, I think in like December, somewhere around there, December, January. We're getting another rate rise, okay? Because they got to calm inflation. They got to crash us. I talked about this yesterday. So I think we'll see max pain somewhere at the early part of next year, February, March, when we go into that next meeting, based upon whatever CPI comes out then. So if you forward plan that real estate is months behind, because data in real estate travels way behind. So anything you see today was 2 months ago. So we'll actually see probably max pain there. We know that a $500,000 house monthly payment is costing twice as much now, which is nuts. So the argument of what's the value of that nowadays $500,000 off the comps that was on cheaper money, another thing to be argued. So we know that mortgage demand is down, and we know that builders are liquidating their portfolios. I did an entire video on how bad these home builders are trying to get rid of properties. I mean, they're literally sending text messages out with 8% buy-side commissions and all kinds of crazy incentives to buy these things. They've got fields that they broke ground on, and they don't even know what to do with. That was a whole video, and I'll probably do another one after this because it really needs to be talked about. Real quick, while I was making this video, I got a text from one of the builders, and it was new promotions. This is how bad they're trying to liquidate stuff. 2-for-1 buy downs on loans. They're offering 3.5%, 4.5%, year 3, 5.5%, 5% commissions to buy-side agents bringing deals, $20K off first list of stage 8s, above close by November 30th. 10K off all other inventory. 10K towards closing costs, and they have some some houses that they just pushed under 300,000. It's wild. It's wild. So the stock market is down 25% right now, fluctuating. It's a complete casino. The most volatile thing ever. Up, down, up, down, up, down. We got 2 more rate rises, which means it's gonna go down because there's no catalyst other than lower inflation. We've got a war going on, and we got who knows what's fixing to happen in the future with that. Logistics problems. And this is a kicker, okay? 20 to 30%, depending on where you're at, cancellations on contracts of real estate purchases. That one was mind-boggling, and I see them every day getting canceled. And I'm going to go into that here in a second. And the biggest thing right now, this is my main point of this video, is insurance. Okay, nobody wants to talk about the state of the insurance market in Florida. Okay, if you look at the map I showed yesterday, I'm gonna pull it up right here. We're gonna look at the determination of what Fortune magazine said was overvalued markets based upon, you know, their criteria. I'll put their criteria like right here. But based upon that criteria, they're saying that these counties are way overvalued. Okay, not to mention we just had Hurricane Ian absolutely crush the Fort Myers, Tampa, blah, blah, blah areas, okay? And so insurance is about to change. They're going to change the building code. They're going to change where you can build stuff. They're going to change the 4-point inspections. They're going to come out with, I guarantee you, a 5th inspection point. For those of you who don't know what a 4-point is, it's the electrical, plumbing, AC, roof, okay? HVAC, heating, It's divided into 4 parts, and if you fail those, any one of those, the insurance companies will most likely not insure you. Okay, so let's say you have a house with a roof of over 15 years old. It's got some old plumbing. Let's say it doesn't leak. Say it's galvanized. Let's say you've got some old wiring, or you got some aluminum. You got that paper wire stuff that kind of that paper, stuff that crumbles when you touch it, like in old houses, 1940s. Insurance companies aren't touching it. Okay, they're not touching galvanized plumbing. They're not touching aluminum. They're not touching old roofs. They're not touching anything without wind mitigation. They're not touching anything without massive flood policies. They're not going to touch these flood zones, or they're going to change the flood zone map. See, they're looking for any excuse not to insure these houses because they don't want to get kicked out of Florida. Some do. But they're looking for any excuse not to insure. They're making it really strict, but they're mitigating their risk. I understand why they're doing what they're doing, but it has made an impasse in real estate, its values, and a lot of Florida runs off its dock stamps and the revenue generated from the closing process of, that's how Florida makes money. When you close the property, you pay taxes, dock stamps, and other forms of revenue that, is the reason why we have to close all these transactions. Like, we have to close a transaction for the economy, the real estate economy in Florida to just keep on keeping on. So let me expound on that. If you're saying prices are overvalued in the state of Florida, okay, you can't bind insurance to close them with a loan. And this is not all properties, mostly for the older resale market, okay? If you can't bind it with a loan and only a cash buyer can purchase it, which are very few, because only these cash buyers can close the property, fix what's wrong, and then reinsure it, more likely at a higher rate. Some of these properties are not going to be worth what we're saying they are price per square foot, okay? Houses are based on their prices, the price per square foot. And if you can't insure it to bind a loan, and I'm talking VA, FHA, conventional, things like that. Those 4 points, that wind mitigation, any of those criteria that these insurances are about to change to get more strict, you are not going to be able to, that house is not worth that much anymore. Because in the previous videos, I talked about the cost of home ownership. Everything's going up. Contractors, insurance, maintenance, supplies, just the cost to remodel is going up. It's exponentially more expensive. Just to paint your walls is more expensive now. So if you paid one price for the property that went up, now you also got to pay for all the renovation things that have gone up. It goes on and on and on, all the way down to the insurance of the contractor. Even the title work, the legalities of the title work, the lawyers, the title companies, the agents, all going up. It's inflation. It's crazy. Okay, and that's going to be the first catalyst, okay? And then we're going to factor in home builders. They are liquidating these bad boys because they know they got their hand caught in a cookie jar. So what they did is they saw housing booming. They needed as many as they could. They zapped up as much land as they could. It takes a long time to get these properties on the market and ready to build. Just title inspection on these bad boys are going to draw them out for a while. So any of y'all have ever done a new build deal? I just got out of a really big one, okay? 20 acres, 70 houses. So they're going to go ahead and start doing their due diligence. And that's going to take them 180 days. They're going to ask between 180 days and, you know, more. Okay, water, make sure if it percolates, make sure the title's good, because the farmer 5-10 generations back could have a quick claim deed from a poker deal, and they want to make sure that they're not going to lose any type of title insurance claim, you know, whatever, any type of title claims against it. So that's going to take them a while, and by the time they break ground and they deal with the county, which will take another 3 to 5 months, and they deal with the permits and the engineering and everything, it takes a while. So they've got land drawn out everywhere here in the Panhandle, and they're breaking ground. And once they're committed, it's like they're committed. And they've already ordered all the materials, and they've already contracted all the subcontractors. So it's the perfect storm. And I will say this, that one of the caveats to this is a lot of properties were destroyed down there at Fort Myers, Tampa, all the way across that central part of Florida. And there's going to be a lot of people that have been displaced, so that will take up some of the inventory. But it's just what is going to happen. Like, there's a lot of unanswered questions. Is the state going to come in, or is the federal government going to come in with FEMA or some type of bond or some type of ability to create insurance for the infrastructure of these older properties at the lower end of the spectrum? How are some of these people going to have houses that are not new builds if insurance does not actually insure them so they can close? Because most of the deals are done through a bank, through a lender, and need insurance, you know, and they're wanting you to insure for everything when you get a bank policy, okay? Like when you get a bank loan and you need the insurance to close. They're not playing with it. They're guarding their investment. Trust me, right now, I have a house that I own or finance to somebody, and they will not get insurance on it, and your money is unprotected over there. It's not protected. I tried to get insurance on it. It's an older house. Forget about it. They wanted all these repairs on things that weren't broke, things that are just fine on a 700 square foot house. So aggravating. So I know these insurance things are issues. I'm trying to close deals right now with old roofs, plumbing that is old but works fine, things that are wired okay for 1965, but not for 2022, because they changed the building code so much that, yeah, that some of them are like not modern homes, but you can't go and have the cost of bringing that property up to 2022 incorporated in the property when it works just fine, because houses would be extremely unaffordable. So the government is going to have to regulate, do something with the insurance. Like, I'm all about capitalism. I love capitalism. But Florida is a humongous revenue generator. The water is a humongous revenue generator. The insurance is not a drop in the bucket. Citizens is trying to do that. Citizens just as bad. Or they won't actually insure what they said they're going to insure. There's so many problems with it. It's just got to be figured out. I don't know the answer to the insurance question. I'm not an insurance agent. I'm just a real estate guy trying to close some transactions and know this is the biggest problem that needs to be looked at by politicians or by the insurance sector themselves, or offer some type of neutral policy that'll just get things closed so you can fix the issues once you close. So if you've made it this far in the video, don't forget to like and subscribe. Hit the like button because it helps. It helps move this video so other people can see it. I'm trying not to be dark and gloomy, but this is a serious issue that really needs to be talked about, and people really need to know about these things because there's so much to the real estate market. So what should you do? I would, one, buy good properties, okay? You can still buy properties in Florida for a good price and have a good experience. Buy good properties. No insurance is going to be an issue. Have a good real estate agent, okay? One that understands these things I'm talking about. Roofs, plumbing, HVACs, you know, the 4 points. Know going into the, when you look at the property or you get that inspection back, know what's going to be a problem to close and know what's going to be expensive. Buy good properties. And just like the same way with investing, own good properties. Don't own probable properties that are going to get you sued, okay? And it's very simple. Just have a professional guide you through the process. Vet the professional, please. Please vet the professional, and you'll be fine. Oh, and I want to say this, don't overpay for properties, and I mean don't go to the top end of your budget. Buy a property you can afford and afford the repairs on, because the cost to own these things are going to go up. Insurance, taxes, and basic maintenance. Roofs, air conditioners, refrigerators, plumbing problems. You're going to run into these, so don't buy at the top end of your what you're qualified for. Buy what you can afford and afford to pay off. I'm big on paid off real estate. I'll guard that until I die, because I have been full circle with this, and it would take me 3 hours to explain it. And if you're looking to buy or sell real estate on the Gulf Coast, Alabama and Florida, I'm a licensed real estate agent. Emails down below. Contact me, I can help. So if you're caught in the FOMO and you own a property, the time to sell it was yesterday or today, because I'm calling it top of the market, and we are on our way down, and it could be a hard one, and you could be stuck in that property for years to come, because you don't want to sell until, you know, you get a good price. But that's just the cost of waiting. You know, we've had a really good run for the last 2 years. So what I would do, I would focus on good properties. I would, if I had to get a loan, I'd put half down. You know, I would pay it off as soon as I can. And then you can always refinance out later. We're just in a really bad situation right now with the way the economy's going, the stock market's going, the full paint of the battlefield, and insurance rates, and it's just the perfect storm of uh-oh. And yeah, that's just my opinion on all this. I hope it helped. You know, sorry for being doom and gloom, but I said I'll tell you the truth. Jack Motley has no reason to not tell the truth. My life's paid for. My house is paid for. I really don't have to worry about what people think. I just try to put my opinions out there in an honest way. Nobody does that anymore, it seems like, or speaks their opinion. YouTube's for opinions. Comment down below with your opinion. I want to hear it. We'll get by with this, and I'll see you on the next video. Probably tomorrow, or right after this if I got another thing I got to get off my chest. Because there's a lot of issues out there right now, and you know what? I got a camera right now, and there's nobody else here, so let's talk about it.